Welcome to Incentive Cry from the House of JE, the podcast where digital commerce meets the fine print of cross-border taxation. Have you ever added any online thing to your cart from another country and wonder how the final price was calculated? Alternatively, maybe you are an e-commerce seller facing milestone tax forms from half of the globe. Today, we'll unravel that puzzle. Do you know that over 60% of e-commerce businesses struggle with international tax compliance in their first year? Let us find out why and how to stay ahead. I am Isaac Jennifer from the House of JE.
Let's understand the basics. So, what is cross-border taxation? The set of rules determines how goods and services are taxed when sold between countries. Some incentive for them includes tax treaties, reduce double taxation on income earned in foreign countries. Nigeria, for example, has treaties with countries like UK, France, and South Africa. VAT refund schemes, like businesses exporting goods, may be eligible for VAT refunds in the country of origin. Digital service tax exemption, which explains exemptions may apply to startups or businesses below a certain revenue level. Free trade zones and export processing zones, reduced or zero custom duties and corporate taxes. Nigeria FTZs, example, Lekki Free Zone, offer incentive for e-commerce fulfillment hubs.
We also have the permanent establishment relief, that's the PE relief. Some countries offer safe harbor rules for digital-only businesses. We have the transfer pricing specifications, which helps reduce compliance costs for cross-border transactions between related entities. Then we have the startup incentives. There is a tax holiday or reduced rates for new tech or e-commerce ventures. So some key taxes involved includes 1. VAT, value-added tax, common in Europe. We have GST, goods and service tax, which permits in countries like Asia and Australia. We also have custom duty reliefs, which is imposed on imported goods.
The challenge: each country has its own system, and digital goods, like e-commerce or software, often falls into regulatory gray areas. Imagine selling a digital course from Nigeria to Canada. Who collects tax and how much? Many SMEs find themselves penalized, not for fraud, but for ignorance. One Nigeria seller told us, "I didn't even know I need to register for VAT in the UK."
Big platforms like Amazon automate tax collections, but only if you use their ecosystem. Spotify users, for instance, often need a third-party plugins. The big misconception is thinking e-commerce is borderless. Technically, the internet is, but tax law isn't. Some tools we can use to simplify compliance are Avalara, TaxJar, and Cordano. This can automatically calculate and file tax across jurisdictions. Some small tips for you sellers: always know your target market tax threshold, register early to avoid late penalties, and track invoice details and buyer's location.
Some major updates: the EU introduced a one-stop shop to simplify VAT registration, allowing sellers to file through a single portal. Today's take-home: e-commerce makes the world your market, but taxes makes it your homework. Thank you for your time. Subscribe, like, and follow us on all our social media at JE Consultancy. My name is Chineye Confidence.